Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. I'm starting off analyzing the VIX for you here because something very interesting happened this week where the VIX rallied with the S&P. Now, if you've been following along with the market guys long enough, you'll know that I often talk about the VIX as a contrarian indicator to the S&P. So in other words, when the VIX moves up, the S&P usually moves down and vice versa. But this week, and as you'll see here, these are my targets from last week's report. I did say that the VIX would drop first, which it did, and then bounce with the end of this line right here being my target price for the VIX. So you can see that earlier in the week, the VIX rallied up. Today, we stormed up and then pulled back. But today's price action on the VIX hit my target, so we're going to count that as a win. But look at the S&P. This is SPY. This is the S&P 500 ETF. And as I zoom in here, you'll see that my original forecast for the S&P from last week's report was that I thought we would pull back to the 20-period moving average. Now, remember, the VIX was rallying earlier in the week, and you could see here how the S&P also rallied with a big down move today as we came back to that moving average and then rallied right back up. So you can see that this dramatic increase in volume is something that we need to pay attention to, because when you see big spikes in volume like this, those spikes in volume generally occur at pivot points. You can see back here we see a pivot point with high volume. Back here we see a pivot point with high volume. And for the most part, this high volume on these lower pivot points have resulted in higher prices for the S&P. So we're at a place in time here that is very mixed with the signals, because the VIX has rallied with the S&P, and it's going to be really hard to forecast what the general markets are going to do, because we have markets going independent from each other. They're not even moving in concert. So my forecast for the VIX, I'm going to leave these support levels here in place, but I'm going to erase these lines because I think that the VIX has hit an area of resistance up here. You see this? And so I think that the VIX could pull back just a little bit before rallying again. So I think the VIX is going to pull back. I'm not going to put the bounce in here yet because I think it could bounce off the 20-period moving average. But this is going to be my target for the VIX for next week. Now let's go right back to the S&P. I don't want to confuse you here, but they are, again, inversely related, so we have to pay attention to that. Now if I think the VIX is going to pull back, that means the S&P is most likely going to rally. So I'm going to put this here just like that. I think we're going to rally right back up to test that resistance before we see a drop in volume down here. So for as long as the volume is increasing on the way up, we have to assume that the buyers are still in control of the S&P. And although I'm a cautious buyer, I'm telling people that if you do take any long positions, make sure that you are protecting yourself with stops along the way. So that's the VIX, that's the S&P. Let's take a look at the Russell 2000. Now again, earlier in the week, all markets were rallying, and that was mainly due to the political news coming out of Washington that looked like the tax reform bill was going to pass. The market got very optimistic, it rallied, and that's great. Now this line right here, let me zoom in here. This line is what my target price was, or my forecast was, from last week. So on Monday morning, I'm seeing this big rally, and I'm thinking, okay, well, that signal didn't work out as planned. But as the week progressed, you could see that these candles got smaller and smaller. And then today, from this high, we stormed down to the low, hit my target right there. The end of that line is my target. Again, hits the target within pennies and then bounces. So again, this is a very confusing thing because it tells us that the market is in a sign of indecision. It's more or less mixed emotions coming in from the investors and the money managers. And so we have to really just stick to the technical signals and play it like we would any stock. So from here, I think we're going to see a bounce, a continued bounce off of this moving average and a little bit higher, and then I think we're going to pull back from there. But again, I'm not going to put the pivot point in. This is my forecast for next week with the end of that line right here being my target. Again, if you followed along with the market guys long enough, you'll know that the end of the line is the price target. So keep an eye on this next week because the Russell 2000 is a more broad-based index. It measures 2,000 stocks versus the Dow, which tracks 30 stocks, and the S&P, which tracks 500 stocks. So again, that's the Russell 2000. Now, if we look at the Qs, that's the power shares, QQQ. The forecast lines were followed exactly, just like the VIX. This is my forecast line right here from last week. I said that we would pull back to this moving average where this line, this gap fill point right here, would be my target and support level. And lo and behold, we came back and closed right to the penny on that. Now, where does that leave us for next week? Well, if you look at this particular candle, let me zoom in a little bit more for you so you can see how important this is. This is a hammer pattern with a very long shadow. That vertical line that protrudes from the bottom of that candle is the shadow. When you see long shadows like that, it generally means that the sellers tried early on to push it down, but the buyers came back with a fight, and they fought back, closing the price higher, right on the moving average. So this tells me there's a sign of strength moving into the market. Therefore, I think we're going to move right back up to test this resistance high, maybe even set a new high for the Qs. But this is my forecast, so keep an eye on that. So as you can see, the technical signals are working extremely well. And what we need to do, again, as a community of investors and traders, is educate people on these technical signals, not just as a forecasting tool, but also as a risk management tool. Because you can see here, again, if you're trading a NASDAQ stock or a tech stock, and you see that the Qs are bouncing off of support, that support is what we're using not just as the entry point to get in, but if it fails to rally, that support level becomes our area of protection. So in other words, we're placing our stop loss orders somewhere below support in the event the market collapses and fails to rally with the power of the buyers on the side of that rally. So again, this is very, very important information that we all not only use, but we often promote to our friends and family, and I hope you do that. Now, finally, if you go to the Market Guys website, that's themarketguys.com, and scroll down just a little bit, you'll see that there's a link down here for our next open house, which is going to be on December 18th. I'm telling you now so that you have plenty of time to register and save your seat, but also, if you can, promote this for the main reason that the more people we have following the technical signals, the stronger the signals become. You see, it's kind of like an analyst that has a larger audience is going to actually start moving the market more so than someone who has very little or a very small audience. So the more people that learn technical analysis, the better the signals become because more people follow the signals. And that translates to be more profits in our pockets because the signals become more reliable. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.